Last Friday, Trump adopted a softer stance and hinted that imposing a 100% tariff on Chinese goods is not feasible. Welcome to today's 24-hour global financial update. Today's focus: U.S.-China trade talks may restart, the Federal Reserve signals rate cuts, global economy faces downside risks, and gold prices fluctuate sharply. First news: Trump to meet Xi Jinping, trade war temporarily eases. Last Friday, Trump adopted a softer stance, saying his meeting with Xi Jinping in South Korea in 2 weeks will proceed as scheduled, and hinted that imposing a 100% tariff on Chinese goods is not feasible. He emphasized that the U.S. only wants fair treatment and claimed tariffs can safeguard national security. The World Trade Organization warns that if the U.S. and China decouple, global economic output could shrink by 7%. Yale research shows Trump's tariffs cost U.S. households an extra $2,300 annually. Companies shift to U.S. manufacturing, raising costs. If the Fed cuts rates due to weak employment, it may plant inflation risks. Second news: Fed official hints at another rate cut. U.S. Fed President Alberto Musalem said if the labor market worsens and inflation risks are controllable, he may support another rate cut. The market expects a 25 basis point cut at the end of October, keeping the federal funds rate range at 4% to 4.25%. Powell earlier hinted at possibly ending quantitative tightening, QT, signaling liquidity return, but also highlighting growing downside risks for the economy, even potential recession. Third news: IMF warns global economic risks intensify. The IMF stated that renewed U.S.-China friction poses significant downside risks to global growth. If tariffs rise and supply chains are disrupted, global growth could drop by 0.3 percentage points, and Asia's economy will also slow. The IMF forecasts Asia's growth at 4.5% this year, falling to 4.1% next year, with trade policy uncertainty and geopolitical tensions as key pressures. Final news: safe haven cooling triggers profit-taking, gold plunges from highs. Last Friday, gold prices plunged as the U.S. released two bearish signals. First, Trump's softer remarks eased concerns over escalating U.S.-China trade war. Second, Trump plans to meet Russia's president in Budapest, reducing geopolitical tensions. Lower safe haven demand triggered profit-taking, causing gold to dive from highs. Technically, gold rebounded at the 4,200 support level, with short-term resistance at 4,290 to 4,310. A breakout could retest the 4,380 high. If it falls below 4,180 to 4,200, it may further drop toward around 4,100. Thank you for watching today's market news. If our information is helpful to you, please hit the like button and follow for daily global market insights. We'll see you next time.